warm welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Sikunj Dalmia as well as Aisha Faridi. The market has been holding up comfortably above that 19,300 mark, but seems to have locked out a bit because it's been just around that 19,320 mark for most part of the trading session. So very range bound as far as the Indian market at this point of time. Having said that, a lot of pockets which are showing a bit of an outperformance, case in point being energy. So names like HPCL, BPCL, IOCL, they're all trending higher, and some of the power names as well, whether it's a JSW Energy, etc., they are doing quite well in the trading session. Plus, we are seeing some sort of bounce back come by from some of the PSU banking names as well. India VIX is something which has actually spiked quite a bit on an intraday basis. A 7% move coming in on India VIX at the start of a fresh new month itself. So we are watching out for that as well. On the losing side, you have names like Sun Pharma, Bajaj Auto, Power Grid, Ciplas. Of course, for the entire auto pack, it's been a bit of a differentiated picture. It's not a secular trend that we are witnessing at this point of time, and that's how stocks too have been moving. The heavyweights are participating today, so whether it's the HDFC Twins or Reliance, all of them are doing their bit. So definitely some sort of outperformance coming in from the broader markets and heavyweights, but market continues to hold steady for now.
Oh yeah, absolutely steady. We are now clocking down on 19,400 for the futures, 19,300 already here for the Nifty spot as we speak. Just a couple of other stocks as well which are making the headlines, and L&T Finance sure has been one stock from the word go in focus, with Dinanath Dubhashi, the earlier MD and CEO, now set to retire in 2024, and Sudipta Roy now going to be appointed from thereof. Brokerages view this development as a positive, and they do expect this to now become a case for re-rating. That stock has been holding gap up from the word go, even now latching on to 7% gains. The other ones which are holding a buzz on the back of their Q1 updates have been Karur Vysya Bank. The deposits and advances both have grown about 14%. Bank of Maharashtra, wherein the deposits and advances have seen an uptick of about 25%, and the CASA deposits as well have come in higher by 14% on a year-on-year basis. There's Mazgaon Dock as well. We chatted with the management earlier today. They've signed a contract with Indian Navy worth about 2,725 crore rupees, and this is one stock which is holding very steady in trade. Let me now welcome then on board Kunal as well as Nuresh and find out whether the market gains are going to be intact or not. Kunal, any reason to worry about profit taking or thinking whether we're reaching a peak?
No, I don't see anything like that on the indices. We are into a fine fettle on the index trends. Sector churn is also quite strong. In fact, today we are seeing two classical trends. The Nifty Pharma index taking a bit of a backseat. Auto index seeing a mild correction, especially the large cap names and the performing stocks, which have done reasonably well over the last 3-4 days of the end of June expiry, start of July expiry, as well as from the March close for themselves. And the money churn is happening at the PSU banking stocks, private sector banking names. So as of now, we are not seeing any kind of a frenzy or euphoria into the market internals, and I think that could be reason enough that maybe this trend would sustain. Now we ideally look out for psychological levels where there's some amount of call which happens. So 19,500 becomes a round strike, which could probably be a near-term target which you can keep for the index spot levels for the weekly expiry. That's on Thursday.
Naresh, we are off to a good start for the week and for the series. Are we likely to build on it, or at some point in time, it'll be like law of gravity, which markets have ignored for a long time?
So this is the fourth gap up on the Nifty. We generally don't get more than 4 or 5 gap ups. There is generally a pause after the fourth gap. So a little bit of a pause is possible over the next couple of sessions. The difference today is, if you look at the Nifty, we are up 130 points. But out of that, 90 to 100 point comes from the two names, Reliance and HDFC Twins, which were laggards for a long period of time. So the leadership is changing. We are getting the heavyweights do well. So going forward, it could be purely an index move could continue or not fall as much. But there is some bit of a pause in some stocks. But the trend is still strong, and it could build on purely if these two names sustain. So we saw new high on HDFC Bank, but could not sustain there. But it's still at that 1730 mark. If that sustains, that itself can push the Nifty. So overall, the bias is positive. A 2-day pause could be normal, which could be, say, we go towards 19,200, 19,150 levels. So overall, the bias is positive. And after a 2-day fall, we could again resume.
What do we have? We've got Nice little steady bounce in Zomato. Looking good, looking strong. Could it catch up? In fact, I actually thought 8-10 days ago that some of these consumer tech and fintech stocks should peak out because US interest rates were likely to move higher, and the Nasdaq, in a sense, did show a little bit of hum and drum here and there. But given what's happening to Apple, how Microsoft and Nvidia are moving higher, I guess one should not be in a hurry to really call some of these stocks a top yet. So Nuresh, where does good old Zomato goes from here?
So on expected lines, the stock is taking some bit of a pause at that 75.80 mark, which was the previous say highs made in 2022. So if you go back to 2022, it peaked out at around 79.80 levels. Then in end of 2022 also was 75. So it made this breakout move from 55 to this 80 mark, and we are still again seeing that resistance to be seen at around 80. So some more time before it can break beyond 80. Would like a dip ideally to take an entry again, but the stock has not corrected over the last 3 weeks. It's gone into a sideways range. 73 has been a short-term range, 79 on the upside is a problem, 79.80. So overall, the trend has reversed. We'll continue to see pauses and a little bit of a dip. That should be an opportunity. So overall, above 80 is the next trend momentum coming in. For now, one wants to be looking to buy at 68 to 73 band.
That's a take coming in. Let's welcome on board Kunj Bansal as well to talk to us about the fundamentals of the market. And Kunj, that's exactly the question that we're trying to answer for our viewers. After the kind of rally that we have seen, is it a good time to book some profits, or do you expect this momentum to continue?
Yeah, I wish there were simple answers available to such a simple question. Nonetheless, few things. One, in terms of market movement, if we still put it, the last peak of the market before crossing the recent life highs for the last 3-4 days had come in October 21, and after that market had been in a range bound movement of market. So what I'm trying to say is, if we put a 20 months percent return on the market, it's hardly 3-4% taking in the highs of the October 21, which was around 18,600 to current 19,200. So that's one way to it. While in the recent past, it looks that it has moved up too sharply, but on a 20 months basis, it's only 6% return. Coming to what should one do in the market, I think one has to very clearly, first of all, segregate whether you are looking at a short-term trading kind of outlook or a medium-term investing. For trading, the way, although it's always difficult to assess, but the way the momentum is there in the market, the way buying has been happening, the way we are receiving global inflows, and to that extent, since the global inflows were earlier not there, a little bit of under ownership was there. Looks like the momentum could continue. So for short-term traders, I think they should continue to trade in the market with a bullish stance, with their stop losses strictly in mind. For a medium-term investor, I think you can keep waiting, but you will never be able to time the market. Given the way that I am saying that momentum is still there in the market, if you had not been investing, if you were waiting for some time or some particular index level, which did come. So when I say October 21 onwards, last 20 months, there were at least 3 or 4 occasions when the Nifty dropped down to 16,000 odd or so. But then one always misses thinking that no, now market will go down further. For them, it's even now an opportunity to certainly part invest in the market with a mindset that yes, short-term corrections can come again. So both ways, I think for the medium-term investors, they should certainly keep taking exposure partly, and for short-term traders, the momentum is still supporting.
All right, I'm just going to shift gears and let's look at a list of stocks which are really championing the market rally. SBI, Can Bank, BOB, PNB, RBL Bank. It's not HDFC Bank. Time to change gears, Kunal. Go back to PSUs.
Yeah, so it's a phase of the market when there is too much confidence or the sentiment is positive, so there is a risk-on phase in the market, and I think we have started to enter into that phase. That's why I was saying that it's not a frenzy as such as of now. But maybe if the next couple of days we see like this 5%, 7% up move in these individual PSU banking stocks, then we can probably categorize with that probably the markets have entered into an overbought phase. So I believe as of now, the money is moving into the high beta pockets PSU banking stocks, I think most of the names which are actually rising up higher, have seen an add-on effect than what they've seen on Friday. Many of the stocks, like for example, PNB, Maharashtra Bank, Central Bank, many of these stocks, I was actually looking at these two-digit names. They've done exceptionally well for themselves today. So I would probably expect more follow-through up move for these stocks as a short-term play. But again, this could just be more of a short-term play for these PSU banking stocks. The more meatier trade could be if the large cap private sector banks, like what we've seen today, HDFC Bank, ICICI Bank, for example, making a good comeback, trading at those 940, 950 mark. If these stocks sustain their up move, what they've shown in the last 4-5 days, then we can expect the Bank Nifty to move up higher. Otherwise, we could probably bring into an overbought phase maybe over the next couple of days.
Right. Kunj, what are you making of the Q1 updates, especially coming in from these smaller banks so far? South Indian Bank, the advances have come in higher, 14.5%. The total deposits higher by almost 8.5%. Bank of Maharashtra as well, the advances have risen about 24%. Deposits uptick of nearly about 25%. And Karur Vysya as well, decent numbers there.
So obviously, the kind of commentary, the Q1 update that the banks have given is quite on the positive side. In a way, it's a continuation. So let me just put in some numbers for the benefit of our viewers. The credit growth for the banking industry for FY23, obviously which ended in March, was 15% plus. So that was a double-digit growth after 2 years of single-digit growth. Part of the reason for the earlier year single-digit growth was, of course, the corona pandemic. So that's one number. Now that obviously resulted or rather reflected in the Q4 numbers also. So if we go back and look at the Q4 numbers, almost all the banks in general reported reasonably good growth in advances. That has continued in the current quarter. In fact, even the banking sector credit growth as a whole, which was 15% plus in the FY23, has largely remained in that range of 15-16% in last 2.5 months, for which numbers are available till now. So it's a positive trend in general, although on one side we do have this consumption slowdown staring at us. But clearly these numbers show that the advances growth has been there, and the advances growth has come from retail as well, along with the industrial growth that has been there. So in a net, I think it's a positive sign, which is a continuation of the earlier quarters.
To that Federal Bank as well, wherein the advances have seen an uptick of 5% on a sequential basis. Deposits are up 4% QOQ, and the CASA as well has seen an uptick of about 5% on a year-on-year basis. This, of course, is a much larger base as opposed to Karur Vysya or Bank of Maharashtra, etc. We'll take a very quick break on that note. Come right back. We'll continue our chat with our experts on board.
Little steady gain in Canara Bank. It's looking steady and it is looking solid. Now, we've got this chip in the market. Well, it's an SBI, which has not done anything in last 6 months, is chipping in. Reliance, which has done nothing, it is chipping in. So you are in that phase of the market where the underperformers now are catching up. When I say underperformers for this year. HDFC also, frankly, is an underperformer. Let's hear out Ravi Dharmeshan what he has to say about the HDFC Bank and HDFC Limited merger. I mean, why are markets viewing it so positively? The fine print, the whole assumption of growth, what Shashi Jagdishan has just said, that I will add one HDFC Bank every 4 years. Nothing is new. What is new is market's approach. And for a stock which was crying to be bought by institutional investors, nobody ignored it. Today, there seems to be a mad rush into HDFC Bank and HDFC Limited just because the merger has gone through.
It cannot be anything but positive overall. We finally have a company, now more than one company is there, which can be a global leader. So I think over a longer term period, this behemoth will become a must own for most of the large global funds. So, and it is, I mean, I'm very glad this is a group that you can, hold at the highest in terms of corporate governance standard. So absolutely a draw for overall capital into India. And I think that's the beacon of Indian market. I mean, if India is going from $3.5 trillion to $5 trillion economy, a company like HDFC Bank can definitely grow. It is not beyond the realm of possibility to grow at 18%. And I think that is the beauty of Indian market, where the largest company can also grow its top line at between 15 and 18%, and the bottom line has a possibility to grow higher than 20% also.
Nuresh, good old Reliance. And I wonder if Reliance is now gaining some weight, what it will do to the Nifty. Between HDFC Bank and Reliance, it's a deadly combination of about 25%. 25% of the Nifty, which was sleepy, now is jumping.
Exactly the case. So it's been a long time since both of these names have actually taken leadership. Reliance is still away from that all-time highs of 2,800 odd levels, which was done in May of last year. It was 2,850. Then in October of 21, it was around 2,750. Just in December of last year, also the stock had come to 2,750. So given that we've started making higher tops and higher bottoms, the recent highs of 2,580 has been taken out. It gives us a target price of first to start with 2,650 and then 2,750, 2,800 also. And if this moves up to those levels, that clearly gives a push to the Nifty as well. So that's the reason cannot get expect a much larger dip on the index, because 25% of the weight is now taking some leadership. So an HDFC Bank sustaining 1730 also would imply a big 2 to 3 year breakout. So overall, HDFC and Reliance could be holding fort going forward.
Today, and I don't discuss this one, is Suzlon. And now institutional investors brokerage have started covering this one. I think ISEC had a note on it and Nuvama had a note on it. But Suzlon was 7 rupees and 7 rupees has become 17 rupees. Let's look at the 1 year chart here. And I got to say hello, Kunal. When I see Suzlon going up, I always say hello. Yeah, that's the right way. Hello. Yeah, what's happening?
It can very soon be buy also.
See, look, they're trying to change things and understand.
That is the question.
Whether the hello be buy this time.
But the problem is, there are better ideas. Where the risk reward ratio, even if you're an investor, is better. And even if you're a trader, it is better. So now, how do I take the hello forward?
So 7 is 17, but it was 391 and it's still at 17.
Yeah.
So I think it's the way which you look at recent lows. Yes, the stock has done
391 was the all-time high.
All-time high.
Was it 500 or something? No.
No, I think 390. This is post adjustment. I think the actual price was more than 1,000 plus.
Yeah, that's what I remember.
Yeah, more 1,000 plus. But again, not too much keen into buying the stock or recommending the stock even at current levels. There are far better names. It's always better to stick to large cap names. The concern with stocks like Suzlon is the behavior of the stock going into up circuits and down circuits in a very consistent kind of a manner. Today the stock opened up higher, went into an up circuit, still it's in an up circuit mode. But in case if the trend reverses for the stock, getting out of the stock at your anticipated stop loss level may be a bit tricky. So I would refrain and as well as stay away from such names.
The other one is
349 in 2008 on Suzlon.
Yeah, I mean, I think there's a bonus or split, and I mean, I've lost track of the stock, but at one point in time, I think it had just about made its way to the Nifty. And some of the best guys, I mean, the real guys whom we call as the market gurus, out of the top 4-5, one Indian market guru had 5% ownership in it. So it's not that the old boys club also got this one wrong.
Definitely,
but one stock which I think is worth revisiting, and I'm going to look at the data of some of the NBFCs here. And 3-year change is what we are looking at in terms of NBFC. And there's one NBFC which is really at the bottom of the barrel. It has just nowhere lived up to the reputation of being from a pedigree house like L&T. See, if you are in an NBFC business, there are 3 things to understand. One, the size of the opportunity. In India, which is an underbanked, underfinanced economy, that's 5-year change actually, not 3 years. So 5-year change, Chola Finance up 3x, Bajaj Finance is up 2x, but L&T Finance in the last 5 years, and we'll blow that graphic up, is actually down. AB Capital is up 55%, Mahindra Finance is up 23%. So there are 2 stocks which have underperformed. One is L&T Finance and second is Mahindra Finance. 6 months ago, I would have also said Aditya Birla Capital. But Aditya Birla Capital, does not have that kind of a long pedigree history because it went public couple of years ago. It was part of Aditya Birla Nuvo, and then the offshoot, and then came the NBFC crisis. So it's gone through some rough weather. But L&T Finance, why we're discussing today, where they've informed exchanges that there is going to be a change of guard, and change of guard in a financial firm really matters. See, what is the lending business? Ability to mobilize deposit. L&T Finance has a good brand because of L&T. B, finding customers, which L&T Finance in the corporate book has plenty because of the entire L&T supply chain. Third is creating a retail franchise book, which I think they've failed. And fourth is the cost of capital, which is the most important thing, which L&T Finance had a great comfort because of the L&T brand. Yet, if you frankly ask me, it has nowhere lived up to the expectation which it had. Kunj Bansal, I get a sense that you will say yes to everything I've just said about L&T Finance.
See, it's a market. Every company operates with its own, every management operates with its own business model. And obviously, some will have successes and some will not have as successes. In the last 5 years, if we look, the large part of success for NBFC has come from the personal loan front, personal lending front. And whichever NBFCs, whichever managements went into that in terms of higher percentage as a percent of their business, as a percent of their lending, as a percent of revenue, as a percent of profits, have done very well. One, of course, in terms of their financials, and two, as a result, rewarded by the market in terms of share price performance. There was another set of managements and NBFCs which were focusing on non-retail. Non-retail means partly infrastructure, partly real estate, very selectively in capital goods, which of course we can put it as a part of infrastructure, and little bit of industrial lending. Now, if we leave aside last 1.5 years, wherein we have seen a pickup in the infra come capital good come engineering kind of businesses led by continuous government investment, recently added by the private sector capex. Leave aside that 1.5 years, the 3.5 year period before that in the 5 year was not at all supportive for the industrial lending, infrastructure lending. Real estate lending was, of course, really beaten badly during the times of Corona. One, genuinely because some NPAs came in, and two, even if the NPAs didn't come in, the market didn't reward. So there was this second set of NBFCs which was in these kind of businesses, which obviously as a result couldn't show it in their financial performance also, and market also didn't reward. So I guess it's a matter of time and then companies do change their business models. Also in between there were some incidences of some managements buying microfinance businesses, some management selling microfinance businesses. Then the real estate lending came in focus because of the asset quality issues that it practically doesn't have. So a lot of managements did that, also started real estate lending. Some of them bought it out. So that's where market has accordingly taken its time to reward those businesses. If those businesses continue to do well, and if the same thing, the same phase is there of liking those particular sub-segments of business, they will be rewarded as well. If not, that's the story. And actually, that's how it should happen also. Otherwise, how will the investors keep working on finding new ideas in the market? How will the new incremental money keep finding good stocks at attractive valuations? It's the same set of companies or the managements which will keep getting rewarded higher. At some point of time, the valuations will become completely unbearable.
Just wanted your take regarding the auto pack, and which is the chart that looks the strongest to you amongst that, because at least on a fundamental basis, the likes of Tata Motors, Ashok Leyland, M&M surprised positively, while Maruti, Hero MotoCorp, TVS Motors were a bit lukewarm. Chart-wise, what's the best recommendation? Naresh, you'll have to unmute yourself.
Yeah. So technically, a lot of auto names have done well. So the two names which come on the radar in terms of risk rewards, earlier it was Mahindra and Mahindra which did well, TVS Motors which did well, Bajaj Auto recently did well. The two names where the risk reward is very interesting is Hero MotoCorp and Maruti. Now, if you look at Hero MotoCorp, the stock used to be 2,700, 2,900 back in 2014-15. So almost 8 to 9 years of zero return, only dividends. And now has started taking a reversal and started taking leadership. Even today, the stock did not correct much after the monthly numbers, which were below expectation. That's an indication that the stock seems to have digested the worst possibilities and now making a trend change. Sustaining 2,900, 3,000 would be a multi-year trend change out here. And it could be similar to what happened with other auto stocks. So Hero MotoCorp looks like a low downside risk and possibility to make a higher over the medium term. Same way, if you go back to Maruti, the stock in 2018 made attempts around the 10,000 mark couple of times, topped out at 9,800, 10,000. Even the last 1 year, it has made the same problem around 9,800. We are seeing a little bit of a dip today from that 9,800 mark, which was done on Friday. So once it crosses 9,800, 10,000, it would be a 5-year breakout, which could be very similar move which happens on a 5-year breakout, wherein it could go up 20-30% over the next 1 year. or even a lesser time frame. So expecting that to eventually break out, so buy on dips. So I would go contra in names which could take new leadership instead of the existing winners.
Well, while of course it's Reliance, which is leading the oil and gas sector to contribute maximum to today's move, along with of course BPCL. Within banks, while SBI, of course, in terms of weightage is pulling up, but in terms of a pure percentage gain, it's IDFC which is actually holding on. It's a solid 6% move that you're seeing on that stock. There's of course Canara Bank as well, which is higher by nearly about 6%, and then BOB, which is also sitting pretty with a 5% gain coming in here. Kunal, any read through on the charts? IDFC, I recall, was one of the chart buster ideas as well a while back.
Yeah, some time back, and I've been bullish on the stock, but I think right now the flavor, as I was mentioning earlier, is the PSU banking names. If you're a short-term trader, now if you're looking at a 3-day, 5-day kind of a time horizon, and you're looking at a quick swing trade, then I think something like maybe a PNB at 54, 53 and a half odd levels could be a very good bet. From current zone. SPI, I think the previous high was around 600, 605, almost a couple of months back, from where the stock had fallen down to I think 550 or lower. So I think that 600 should be taken out in this move for SPI. Bank of Baroda, I think, is very close towards breaking that 200 level. So maybe another swing breakout of 5% for Bank of Baroda, and so would be the case with the other names. So the options are a lot more open up for the PSU banking stocks. So it depends on the risk appetite of each trader, but I would believe that possibly SBI could be a stronger bet for someone who's looking out for a lot more stable stock. But for someone who's more high risk in nature, then I think maybe something like PNB at current levels could be a good bet for a target of 60 plus.
It's good old ITC, good old Dabur, good old HUL, and you normally don't see these stocks participate when markets are in a strong momentum group. Normally ITC, which has been in performing stock, and FMCG stock, it's the last one to come up. And Nisha, Aisha, what amazes me is that when ITC was going down, FIs were selling. They said it's ESG tobacco, we don't like it. Now they're coming back, every brokerage, at least institutional brokerage, they're saying that all those concerns are the backseat. I was looking at the quarterly update of ITC, whatever is available in the public domain, the FI holding has gone higher. So what has changed? Their core business is still the same. It is nothing else but the perception changes, and that's what markets are. 5 years ago, if I would have told you that in India the two-wheeler market will not even grow at 10%, you would have laughed. Is that impossible? AC sales will not grow, you would have laughed. But that's the data. I was reading this Kotak report which says that one of the big prediction everyone got wrong 5 years ago was two-wheeler sales. Hero MotoCorp has done nothing. iShare technically, let's look at the 5-year chart, and let's keep TVS aside because that's become a special situation stock. But you look at TVS, iShare, let's look at it, 5-year change please. That's today's ITC. This is a 5-year change for TVS Motor. Now this becomes an exceptionally special stock. So let's keep it out, the outlier. But look at Hero MotoCorp. I would suspect the same for Bajaj Auto. I would suspect the same even for iShare. Let's look at these three stocks, the 5-year change in some of these stocks. And if at all the P multiples for some of these stocks has done nothing, look at it what. Hero MotoCorp is up 11%. iShare has not even given a 10% return. 10% return being right? And then you look at Bajaj Auto, I don't think it's going to be very far away. And by the way, we are in a strong bull run. And Kunj Bansal, 5 years ago, two-wheelers were growing, India was growing, bicycle wale, cycle wale scooter le rahe the, scooter wale motorcycle le rahe the. But look at these stocks, they've done nothing.
Yeah, so for me, surprise is not as much of the fact that 5 years ago there was an expectation and everybody's prediction of a good growth in two-wheeler, which got affected subsequently very badly by Corona. For me, surprise is that today why the sales are not picking up. So although if I look at selective numbers, there seems to be in the recent past, last 1 or 2 months numbers, retail sales of two-wheelers seem to be going up. But for me, as I said, the bigger surprise is the why sales are not picking up now. We clearly have the higher priced vehicles like passenger vehicles, SUVs, clearly showing very good growth. As I said, surprise is why it's not growing now. One of the reasons is the apparent slowdown in the consumption that we have specifically across rural areas. The second reason is the inflation that we had for last 1.5 years. And third reason is the higher interest rates which were there for last 1 year. So these could be some of the reasons. But still, given the way the India is kind of more towards the middle income group people, two-wheeler sales should have certainly gone up. So that's one part. Two part, yes. Now this is where I will say that yes, I agree with you. Two-wheeler sales in last 5 years haven't done anything, and which is actually a surprise. So we are in bull market. I would rephrase it to say we have just started the bull market. And it's quite likely that this bull market, coupled with the fact that now interest rates have peaked out, they haven't started going down, but hopefully they won't go up. So that gives a time for people to plan up their budgets, number one. Number two, hopefully rural consumption should pick up if monsoon, the way it has started, stays normal, although there are talks of El Nino and things like that. So we should see finally the two-wheeler sales, which have not been there, coming, picking up. And if along with that market stays, who knows, finally this could be the time of the two-wheeler stocks.
Two-wheeler stocks are not moving higher. The sales are not picking up yet. We're all wondering why. But the other stock that we're just discussing with ITC, that's sitting at all-time high levels, 460, very close to that 500 mark. Listen into the conversation that Nikunj had with Mr. Puri at ITC as to what the growth outlook is for the company.
The idea is to continuously deliver industry-leading growth, and what gives us the confidence is that we have established the right to win.
Industry-leading growth is incremental. The capacity you're building is telling me that you're preparing for exponential growth.
Well, it's like this. It's like this, that while we create the civil infrastructure, the line addition is in consonance with the market growth. Okay, that's how we do it. Because in a food factory, it's not a smart idea to keep on constructing.
Right.
So a lot of hygiene standards have to be very, very strict here. So if we are to scale up beyond what we have constructed, it will be a completely isolated construction, adjacent but isolated. Right. So that's the point I'm making. Capacity addition will happen.
Okay. So before we move from the another unit, from biscuits to chips, everything is in one unit. I told you I've come with a hungry stomach to the ITC unit. What are the new businesses which you're incubating, which you think in the medium term, 3 to 5 years, will add at least 1,000 crore of top line?
Okay. So I will tell you in two parts. Let me tell you in FMCG, and let me tell you some completely new categories. So businesses in the medium term that will scale up are categories that we are incubating. One are certain adjacencies that Ashirwad and Sunfeast are getting in. Two are newer categories like beverages and juices.
Back with closing trades right here in 80 now, holding out very steady, 19,400 still on the Nifty futures, crossed that 19,300 print for the Nifty spot as well. But today, more than what the large caps are doing, your likes of Reliance, ITC, SBI, Bajaj Finance, the broader end of the market as well is equally lively, if not more. L&T Finance, IDFC, Canara Bank, IOC, BOB, these are seeing some very stupendous gains come in. Of course, sectorally, it's oil and gas, metals and banks and cement, which are actually contributing a whole lot to today's move. Let's just revisit, in fact, some of these OMC names. Actually, before OMC, Kunal, Reliance has made a solid 2.5% move, did its bid last week as well, but anything material coming our way?
Yeah, I think now the stock should be on course of reaching back towards the previous highs of 2750. I think 2850 was the live high for Reliance Industries, and from there it's been making consistent lower tops. So the first resistance which comes back for Reliance Industries is at 2750 mark. What this move actually has done today is I was looking at the throughout the day data for Reliance Industries in terms of the F&O built up as well as if there is any kind of a writing of call options of options for Reliance Industries, and there's been a stark increase in the way the futures open interest have trended today. So that generally gives a sense that it's not just a breakout move for Reliance Industries, but it's more of a move which has been powered with a lot of change in the open interest for the stock price, as well as now what has happened is that 2,500, 550 mark, which is more of a range for Reliance Industries, that range has been broken out. So we could now be looking at a fresh base of 2550, 2580 for Reliance Industries on the spot levels, and that could probably be 2600 on the futures for Reliance Industries. So it looks very attractive, and I would expect the stock to get into a follow-through up move. 2750 could be the first leg of product target for Reliance.
Okay, so that's about Reliance, but a couple of other big buzzers in the trading session. Mazgaon Dock is higher. Of course, it was up 6 to 7% at the start of the trading session, has fizzled a bit, but still holding up with a gain of 4%. And Maruti is the other one. In fact, we spoke with the management of both the companies. Listen into what they told us.
And apart from the dividend payouts, we also have substantial plans for CapEx. We have already placed an order for a floating dry dock, which would be in the range of around 500 crores, and this expenditure would be incurred over a period of next 2 to 3 years. We are in the process of developing our Nava yard also, which is around 9 to 10 nautical miles from the existing location of Mazgaon Dock Shipbuilders at Bombay. During the current year also, we plan to spend around 50 to 60 crores on development and facilities in our yard. So our capex plans are there. We are also in discussion with the MPPT with respect to acquisition of a couple of berths. So this money would be gainfully utilized in adding to the production capabilities of Mazgaon Dock Shipping.
We will see an improvement starting from this month. So there are some models like the Ertiga, the XL6, the Brezza, the Vitara, the France, Jimny, etc., where we have seen long waiting periods, largely because we've not been able to supply the vehicles because of the semiconductor component shortage. This is likely to improve starting from this month. We hope that Q2, the numbers will be much better. Although we do not have a definitive product projection going forward, because the visibility of the component availability of semiconductors is rather limited. But I can say that while there has been a loss of production in Q1, Q2 looks to be much better than Q1. For the year, our projections remain the same. Last year, our numbers were 259,000, and we expect to exceed this number this year as well.
The flash which will come on RBI that 76% of the 2,000 rupee notes have been tendered back to the government. Sudeep Bandyopadhyay, 76% has been tendered. The deadline, I think, is 30th of September. 26% is left. Can I assume that you've not tendered? The minute you tender, the number will change?
I wish, Nikunj, part of it also was true. But jokes apart, I think, we have seen the big demand.
I was serious.
Every...
No, I meant it when I asked you this question. Why are you taking it as a joke?
Well, Nikunj, both of us know it's a joke. So does our viewers. But coming back, Nikunj, I think, the big demand saw pretty much everything returned. So I think 1,000 rupee notes, of course, everything will come back, and it's just a matter of time. Initially, there was a bit of a panic, but now I think, people are accepting and dealing in 2,000 rupee notes. And, there is no chaos, there is no panic, there is no, rush. So I think things have moved very smoothly as far as this, mini demand of 2,000 rupee notes. So I don't think there's going to be any major impact or any major crisis, chaos, rush, anything like that.
Okay. What do you make of this news in L&T Finance that there is going to be change of guard? Dinanath Dobashi after retirement. After his retirement, there is going to be a senior person from ICICI Bank who would be joining L&T Finance. What do you make of this news?
Well, a couple of things. I think the existing incumbent was expected to retire, and I think the way L&T Finance has moved, I think they had a lot of challenges during the journey, and probably the change of guard is what the board was looking at. at some point of time. And I think this is probably an appropriate time for change of guard. And that's what they're doing. They are getting somebody from a bank with experience in a lot of the verticals where the L&T Finance is operating. So, of course, they are looking at fresh thinking and fresh blood to take the company to the next level. I think, when L&T Finance originally was floated, originally was started, there was a lot of excitement, a lot of expectations. Maybe some of those haven't yet been actualized, and the group will definitely look at some kind of bringing back excitement in the stock and in the count in the business.
Nothing incremental. You got SBI and BOB. You got Canara Bank. All three are giving them some company. Now, Kunal, the difficult bit is what do you choose? Bajaj Finance is at 7,000. SBI has regained momentum. HDFC Bank is just about cut loose from its months of hibernation. And L&T Finance is raring to go. So it's like one of those phases in the market that what not to buy and what to buy.
Yeah, so the problem of plenty is what we categorize, and that's the problem which happens in every kind of a bull market or an up phase when there are too many options to trade for. So, one has to, so we go with the traditional model of going with large caps as the first, port of call whenever the markets are into an uptrend. And if you have some additional capital to try and take risk, that's where we try and go for mid caps. But then we stop there. We don't look at the penny stocks. We don't look at the low beta or the high beta stocks or the low price stocks in that category, even if the trade looks a lot more meatier, except if you are an intraday trader and want to probably garner some gains into that pocket. But on a delivery basis or more of a positional play, we tend to avoid that space. Out of the few names which you mentioned, I would still be very bullish on L&T Finance even at current level. So these kind of moves indicate a change of range, change of regime for stock prices where a base shifts up higher, fresh participation trickles in on the back of the kind of news flow which you've seen for L&T Finance. And I think that's going to be more of a sustainable uptrend. So even if the stock consolidates, say for the next 1 or 2 weeks after today's up move, the move or the next targets for L&T Finance could be at least 15 to 20 rupees higher from current levels.
Okay. Let's also get a buzz around what's happening across the dealing rooms as we are set to close, I think, at another fresh record high. Sharad, what's the buzz that you're picking up?
Well, yes, in focus we are having latent view analytics, and what we are hearing from dealers is the buying is being seen from the domestic institutional investor point of view, and already key DIs already invested in the company have names such as ABSL Mutual Fund, Kotak Mutual Fund, as well as Edelweiss Mutual Fund. The stock itself, the volumes have gone up by almost 6 times its 20-day average and is up more than 18% since March lows. Now, of course, the AI theme is very important for the stock as a lot of inquiries has actually sprung up, especially in the AI related field for the company. And what we are getting from the channel checks is the company is expecting a large AI order to materialize in the second half of FY24. Now, overall, if you see the data analytics industry, India has roughly $12 to $14 billion of revenue potential in this segment, and also the stock would be a beneficiary of data analytics, which is used in the artificial intelligence. However, in the short term, the management did speak to ET now also, and they had stated that the market sluggishness would overall continue in the first half of FY24. However, they said that there is a downside protection when it comes to the falling margins, and they expected to maintain that levels of roughly 21%. And on the expansion front, they would be expanding in the markets of the Europe as well as in certain Indian categories.
Okay, Sharad, that's the buzz coming in. And since we're talking about AI, let's also actually bring in the bite of Vijay Shekhar Sharma of Paytm. He's talking about how artificial intelligence is expected to revolutionize the digital setup going forward, as well as he says there is no funding winter for good startups. Listen in.
Phenomenal is a word. I think this nation should owe the success of digital payment to UPI and the technologies that NPCI is making. I cannot admire them more than saying that they are the truest champion of what as country, as nation, we are seeing digital payments. The contributions like UPI Lite, contribution like credit card on RuPay credit card on UPI, these are phenomenal game changers.
Several issues related to governance, related to regulatory issues have come out. What do you feel is at the core of these issues, seeing all of these startups, some of which are big unicorns?
Well, I won't generalize the issues to a startup ecosystem. I'll generalize. I'll say that find a pattern, figure out what the pattern is. So let's not take, that we live in Delhi and Delhi has a label of bad city, but that's not true. I mean, these are stereotypes that get built. Startups are greatly managed when they are managed disciplinarily from the board, from the executives that are there. And these few cases are very unfaithful, very, very bad in terms of what has happened, but that's not a stroke of every company out there.
Paytm, Zomato, Policy Bazaar, all three are now, well, from where they were versus where they are, it's a lot of difference. So when this entire birth of fintech happened, Nykaa was the poster boy and Paytm was the whipping boy. In this year, I think Paytm has given the best returns and Nykaa has been flat. Why is that?
Well, I think it's got to do with, I think at some point of time, Paytm was definitely looking oversold. And some, research reports came out recommending and expecting a price increase. I think after suffering for a long time, Paytm started in the market, stock started picking up. Also, what's happening in the business side, Nikunj, is that I think they have very clearly realized that profitability and path to profitability are the key factors which the market is interested in hearing and understanding, and they are working towards it, definitely. I won't say that they are definitely out of the woods or they are definitely there, but they are definitely trying, and that I think is showing. As far as Nykaa is concerned, there is fundamentally nothing wrong in the business, and I would definitely even today pick up a Nykaa over a Paytm. Look, beauty and women's lifestyle and beauty related products are a rage world over. One of the most valuable companies in the world is Louis Vuitton, and the owner of Louis Vuitton is probably the richest person, depending on which week you are taking. So beauty and fashion and online on top of it, along with offline, I think is the right combination. Yes, they have a long way to go. They have competition, but I think it's a great business provided they can execute it properly. We'll have to wait and watch, but fundamentally, I like Nykaa from a long-term investment point of view. I also like, you didn't mention delivery. I would say that delivery is another business which I like. It's a 1,000-year-old business. There is nothing great in logistics. They are just bringing technology. They are bringing the right processes to the logistics business. And I'm pretty confident it will succeed. And it is going to, it's a game changer in the logistics business. Now, the question is valuation. At what valuation you are picking up these stocks? And do the valuations justify, the current state of affairs? That's the question. So one has to wait and watch. But Delivery and Nykaa are fundamentally strong businesses, well-established business models, whereas Paytm probably still to establish a viable long-term business model.
In the meantime, just Naresh, wanted your take on a couple of these big buzzers today. BSC, which is almost 11%. Of course, there was this news that they're considering buyback, etc. So that spurred the stock. But then you also have JSW Energy, which has been in quite a bit of an uptrend.
So I'll take up JSW Energy first, which is a stock which I track closely. The stock gave a triangle breakout about 270-75 levels, saw a spiky volume for 2 sessions, then did a drift off, fade off for the next 4-5 sessions, and now again making a fresh move. So the trend is positive, clear. A very strong base made around 200 levels. So 200 was the bottom back in June of last year, again the bottom in March of this year, and now is starting a new trend. So this could go towards the 330 mark eventually. So looks very promising. BSC is a recovery from the lows, and it's made a strong recovery from 400 to 650 plus. So out there, 700 is a major resistance. So 700, 730 would be tough to cross. Risk reward is offered at these prices. Would wait for a dip over the next few sessions to actually look at it as a buy. But JSW Energy looks interesting even from current levels.
Energy has been trending and pull up JBM Auto, and not just today's stock move on that one. Pull up maybe a 1 month and then you will see that stock has been in a bull run of its own. That's JBM Auto for you, a stellar run coming in for that one at this point of time. But time to get some BTST ideas as well from our chartist. Kunal, what's the buy today, sell tomorrow idea?
So I'll go with Canara Bank as the first trade, suggesting a buy with a target of 330, stop loss at 308. And IDFC First Bank is also coming back into its breakout mode. So I think closer to 80-81 would suggest a buy with a target of 88, stop loss at 77.
Naresh, your BTSC recommendations?
So that would be a buy on Biocon. A pause day today could again come back tomorrow. Stop loss at 258, target at 275. Second would be a buy on Jindal Steel. Getting into that touching distance of 600 resistance could break out. Stop loss at 587, target price of 615.
Okay, on that note, gentlemen, we let you go. Sudeep, Naresh, as well as Gunal, thank you so much for joining us today. But for now, we are ending the trading session with a gain of almost 150 points on the Nifty, very close to the highest point of the trading session. And look at the smart advance decline as well. There are 1,200 stocks advancing to 900 stocks declining, and even the broader market, especially the small cap index, that is what showed the maximum outperformance, 1.25% higher at that. Sensex comfortably above 65,000 and the Bank Nifty too holding up with solid gains. In terms of the sectoral moves, of course, it was energy which was in focus. That was pulled higher by the big coming in on Reliance as well. Over 2% gains coming in for Reliance today. The other heavyweights that were doing quite good was the HDFC Twins. So you have HDFC Limited as well as Bank, which did quite well in the trading session, and other energy names like BPCL, IOCL, HPCL were some of the other names that we are watching out for. From the PSU banking pack, it was Canara Bank, SBI made a bit of a comeback, and then Bank of Maharashtra was also reacting to the quarterly updates. Talking about updates, autos was in focus on account of that. Tata Motors did well, can't say the same about Hero. So that's the kind of reactions that we have seen on some of the counters.
Yeah, when it comes to the broader end of the market, some of the active movers which saw an OI build up, there was definitely Bata. Although the stock languished, closed in lower by about 3%. That was pretty active. Of course, the OMC pack, HP, BP, IOC, they were all holding a buzz in trade and have seen a fair amount of OI addition as well. There was Bandhan Bank, which we highlighted, looked very strong. As was the case with a BOB, with a Can Bank, IFC. In fact, most of these stocks have seen a gain on a BOB of about 5%, Can Bank nearly 5.5%, and IDFC rocketed about 6.25% gains on the futures. Persistent Systems has seen an OI build-up of about almost 15.9% or so. That's also been an active stock today. On the losing side, there was Laurus Labs, Persistent, like I just highlighted. Bandhan as well was down 3%. Bata has been a loser as well, as has been Manappuram Finance too. But the big high flyer today from within the large caps, Reliance, ITC, Bajaj Finance and SBI. And from within the broader markets, L&T Finance all the way, IDFC and Can Bank, which have closed in with flying colours. And a fresh closing high as well for the Nifty, well above the 19,300 mark as well. But we're going to wind it up right here on this edition of Closing Trades. We'll see you with all the market action tomorrow morning at 8 a.m.